Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Monday, April the 20th. Let's quickly jump to our news reports for this morning. It looks like a very light week in reference to economic reports. This morning we have no reports Monday through Wednesday, at least so thus far. And of course, the big one is on Thursday, another unemployment claims report. We still haven't had the forecast. We should be getting the forecast in the next couple of days. But remember, the economy continues to show the effects of the slowdown based on the fact that the coronavirus has created the social distancing. And in many states here in the union, many of the what they consider non-essential businesses have been shut down. We're still at about 80 to 85% clip as far as running the economy, but it's still a huge hit. So as the restrictions for staying at home and social distancing starts to become less and less effective in certain counties and throughout some states, I think we're going to start seeing a little bit more movement in the economy, which in turn should cause our stabilization of our economy. We don't know how long it's going to take, but at least we're taking the steps necessary to try to slowly glean our economy back into its normal routine. Let's quickly jump to our analysis today. And what we have here in our market today is essentially a little bit of the same. We have cleared a very important hurdle, which is the 20 SMA. We've held above it. Right now, our struggles are happening with the 50 SMA. So we may consolidate here just a little bit, maybe 2 to 3 days, maybe less, before either moving higher or completely tanking once again to the downside. Remember now that typically the 20 SMA, once it stops being one side of the market, typically tries to become another side of the market. So that would essentially mean that the market would have to retrace potentially 38% in order to come retest the 20 SMA and then continue to the upside. That's on a daily. Okay, that's on a daily. We don't trade a daily chart. We use this as part of our analysis. But here's where the battle is going to be won today. Here's where the battle is going to be won. This 50 SMA right now, we're down. We're down big right now. But we're going to see what kind of bounce back we have, if any, today. Volume again, it's averaging 1.9 million, and our ATR is come down from its record highs this year, but now it's about 134. That means the spreads are pretty huge between our price, our swing highs and swing lows for the last 14 days. Okay, let's look at another one of our time frames here, so we can get a broader aspect of what's going on in the market. Now remember, all of these levels down here that we had talked about, support and resistance, they're all history at this point. As the market clearly breaks through, remember we had the gap on Friday, market fills it. Now we have a trend line to the downside here and a lot of space to move lower. Okay, a lot of space to move lower from this run here where we had a huge spike up which created the gap. We had a retracement, a lot of opportunity to continue to the upside. We just couldn't move any higher. Now we seem to be moving lower. So those are price levels that we have to keep our eyes on. And let me just give you some potential places where the market can come and rest as support before it moves any lower. So that's one of the key areas right there. Let's look at another one of our analysis charts here. And as we can see here, we find ourselves today in a market that's below the intraday low. Here's Friday's close. The blue represents the intraday. The blue represents the intraday high between 9:30 and 4. This is the intraday low between 9:30 and 4. As we can see, the market attempted to go higher, could not go any higher. Broke trend line clearly through, came down to the intraday low, held for a while, 2 touches, breaks through, turn around, boom, use it as support. And this is where we find ourselves right now. We're expecting a little bit more down movement thus far, at least till this level here. And so we're essentially just consolidating right now between, after this run here, the steep drop here, we are currently finding ourselves within this potential oscillation here. And of course, the market is going to decide which direction it's going to choose. The most probable direction obviously is going to be lower, but we'll see, and in order for us to accept higher, we need to come back, use the intraday lower support, and we need to see a higher high. That's the key for today. Keep your eyes open for these levels and have a great training session. Let me know if you have any questions. Take care.